Rohit Srivastava, who is joining us to talk more about markets. Rohit, what would you make of this weakish spell which we've seen at least for the first half of the session so far?
I think we are seeing a much anticipated pullback, which should be good because it gives you better entry points as far as stocks are concerned. One of the reasons behind it is also that we did see some kind of a buying climax overall in the market. I noted it in, say, the Nifty PSU Bank or PSU stocks indices, but also today morning I'm seeing even in the Nifty 500, so that's more broad-based. The volume that we are seeing right now is very similar to what we saw, say, in December of 2022, after which we had a weak spell in the market. Now, I don't expect it to be similar to that, but it does give you a reason for getting this 1 week, 2 week kind of a pullback consolidation before markets can move higher. So I think that's a good thing. It may last for a while. We should be open to this corrective pullback, going on for some time. In terms of levels, the worst case scenario I think could be as low as 19,600, which is just around 61% of the recent rally that we saw from the low in August. It doesn't necessarily have to go that far, but that's, like I said, the worst case scenario. In between, we'll be looking at somewhere around 19,780 as an interim support if it holds.
And the two biggest culprits, Rohit, one is HDFC Bank, the others Reliance Industries. What do the charts tell you? Because they two together are bulk of the weakness today.
So Reliance, for some reason, has not been participating. I did have some hope that it would drive the most recent rally even higher than where it had reached above 20,000. But I noted on Monday, even on Twitter, that there was a divergence, which is that the new high in Nifty was not being confirmed by a new high in Reliance. So this failure to participate by itself was a sign of some weakness, reason unknown. We simply will have to wait and see where it finds support, because there are multiple levels, for Reliance, the 20-week average and so on, which will kick in at some point. But right now, while you see weakness, we simply are going to wait and watch on that front. HDFC Bank, of course, has been one of the weakest performers of within the banking space. So somewhere in the private banks, you try to, when we are making choices, we look for outperformance and, simply chase where the performance is. And it's not really been in the HDFC or in Kotak Bank, for example. They've sort of been laggards. Again, for a bigger pickup in the Bank Nifty, we do hope that they would join in at some point of time. Probably that time has not come yet, but we are hopeful that it will happen at some time. So it's basically a wait and watch for most of these right now. You might see stronger performance than others. For example, you see an Axis Bank holding out better than an HDFC Bank. And so when we do that kind of comparative analysis, then it tells us, okay, should we favor strength versus weakness overall? But it does drag the main indices because of the heavyweight proportion of their in the market cap.
What about technology? One would have expected, large cap IT, there were some mid cap IT stocks, at least they were active in the first half of the session, not anymore, to do some of the heavy lifting, because they don't get impacted by crude oil price or even bond yields, but they are also not participating.
That sentiment as a whole, I think ahead of the FOMC meeting, when people look at the market down, then sort of the buying interest, especially from traders, tends to wane away for the time being. Overall, I do think that the IT index has bottomed out, but on a weekday like this, it's possible that you possibly see many other components of the market also weaker. What we'll really end up looking at over 3 to 5 days when you see weakness in the market is which components are holding out better than others. Just like I made the comparison from an Axis to an HDFC, similarly, we'll make comparisons within the tech sector and look for where's the proportionate strength, and even from relative of tech sector to maybe others, like is the IT index relative to the bank index doing better on a 1 week basis or a 2 week basis, and if that continues to hold true, then that's where you'll continue to focus for further upsides from there. So somewhere the IT index has seen its worst. The pullback might just be part of the reaction to the market itself.
Okay, and just before I let you go, Rohit, a word on the energy and the power stocks, because that is what is outperforming today. Power Grid, NTPC, Coal India, SJVN, PFC, they're all flying high. Despite the run-up, do you still expect the rally to continue?
So it's been quite a run for the power basket, and what you're referring to is actually a large part of it is public sector stocks as well. So it's not like you have Tata Power or other private power players really running up. So is it purely a public sector play right now? What I would not want to do is chase the momentum in terms of, especially after what we've seen is a volume climax in PSU stocks. So ideally, I would wait for a pullback there also to happen. It's not showing up yet. We'll wait for a couple of days and see if that happens. That might provide better opportunities rather than chase the momentum right now. But of course, that means that medium to longer term, the trend for this segment probably remains bullish. It's just that near term, we've moved up a lot. There's a lot of volume happening. And that can sometimes end up being a short-term trap technically. And that is the thing to really watch out for.
All right, Rohit, we'll let you go on that one. Thanks so much for joining us on this show.